Hi there, welcome to Kneppy Invest. Today I'm going to disclose 15 companies or stocks that are on my to buy watch list. Now, my to buy watch list doesn't mean I will be buying or hope to buy these companies in the future. It just means there is a possible technical buy signal approaching, and I have to pay a little bit closer attention to these companies in the next week, next 2 weeks, next month, that sort of thing. Quite a few of these companies have been on this buy list for a long time. We're talking months. And a few of these companies have just entered the buy list and might only be on the buy list for a very brief period of time. So let's get stuck into it. And the first company we'll be looking at is MMA Offshore. Now, I was once a shareholder of this company, going back maybe 6, 7, 8, maybe years ago, when they actually called, forget what they're called, something like Mermaid, Marine something, with the code MRM. They changed the name to MMA Offshore. They own 24 vessels to provide marine and subsea services to the maritime industry, particular the energy industry. So there is a little bit of correlation between energy prices and how this company performs. We have seen, or we did see, a share price significantly higher than this going back 5 or so years ago. They went through some hard times. So this company is very capital intensive. So in my opinion, this is not the sort of company you own forever. So it's not a forever stock. It's one where you just trade sentiment. And at this point in time, the share price has been going sideways over the past year, maybe even longer than that. So this chart goes back, this daily chart goes back to September last year, and we have seen the share price going sideways. And there is possible signals out there that the sentiment in this company is shifting around. In fact, I've heard a couple of fund managers in podcasts mention this company as a potential buy. There is a little bit of resistance level right on 47.5 cents, and at the end of closing, end of trading on today's date, the 7th of February, the share price closed at 47 cents, right below that resistance level. If we do see the share price get above that resistance level and remain above the resistance level for a little bit of time, that would be a bullish sign and confirmation the sentiment is definitely shifting around in this company. I would prefer some good financial news in regards to MMA Offshore, but we are seeing oil prices rise. I think they were at $90 a barrel last time I looked. So there could be some good times ahead for this company moving forward. Now, I don't know a lot about how they are performing, or maybe they are diversifying their services. That's definitely a potential with this company. But I'm just looking at the charts, looking at some technical signals, and there is a potential buy moving forward for this company if we do see the share price rise above 47.5 cents. The next company on the list has been in my to buy watch list for about 2 months, and that is Austal. This company is a shipbuilder for commercial and defense, and there's quite a few companies in this space, particularly in the defense space, that have seen the share price under pressure over the past year and a half. I'm talking about Orbital, OEC, Xtech, XTE or something like that. Electro-optic system, EOS, and Austal have all seen their share price in well-defined downtrends, and Austal is the first company that looks like there is a possible shift in sentiment, a definite shift in the trend in the share price. So this could be a harbinger for those other companies for the next year. Now, Austal has been in this downtrend since about October 2020, and that downtrend is depicted by these two moving averages, the 100-day moving average and the 50-day moving average. So share price has been falling. And just recently, we have seen a potential crossover between the 50-day and 100-day moving average. That's a golden cross. And that could be happening any day now. So that would be, for me, a confirmation in the shift in sentiment around this company. But we have seen the Austal share price move into a short-term uptrend since September of last year, so about 4 or 5 months. That's depicted by that upward sloping black line. And really, when the share price moved above $1.95, I think that was confirmation. It actually tested it again, but that was confirmation, I believe, that this uptrend in the share price was valid And I think any time after that, taking a position in this company would have been a low risk entry point. Right now, share price is $2.05 at the end of trading on February 7. We did see a little bit of pullback in the share price over the past 3 days, so this could be another good buying position right now. So Austal is definitely on my buy list, and is very close to being a buy, in my opinion. One of the main problems about the next company on my list, and this company is still on my list, even though there is this problem, is there is a illiquidity problem with CTI Logistics. So illiquidly traded, and I can tell that just by looking at this one-day chart that does go back almost 2 years ago. You can see the movement from one day to the next in the candlesticks is not smooth. So have a look at maybe a Telstra chart, well, not BHP, because that can jump around as well. That's because it's traded on international exchanges. CSL, all those companies that have a lot of shares on issue, fairly popular on the ASX. You'll see from one day to the next, it's fairly smooth. You don't see these massive jumps in the share price. And in fact, at times, no shares will be traded in CTI Logistics for a few days at a time. Now, in saying all that, the shares of this company are in a well-defined uptrend, and there is a fair bit of positive sentiment behind this company. And the shares of this company moved into uptrend around about October 2020. Share price at that point in time was around 60 cents. And any time the share price moved below the 100-day moving average, which is the purple line, was a time to buy into this company. Sort of a low risk time to buy, because if the share price remained below the 100-day moving average, you just sell out fairly quickly, and then there's a good chance the share price could rebound. And we have seen some good news come through from the company, and that's why the share price has taken off over the last few trading days. In fact, share price has increased from about 92 cents to a current share price of $1.08, which is a long-term high for this company. So we have a lot of things going for this company right now. Share price in an uptrend, positive sentiment behind the company, some good news released by the company. The only negative thing about CTI Logistics is just the illiquidity of the shares being traded. Next company is a company I actually have taken a position in, Metro Mining Limited. So this company is a bauxite miner and explorer around the Weipa area of North Queensland. Now, one of the things that has attracted me to this company is definitely a turnaround story. Their bauxite mining operations will expand over the next few years, and we have seen a change in management. And a lot of times, the best time to take a position in a potential turnaround story is when there is a significant change in management. The other side is a shift in sentiment and a shift in the trend of the share price has taken place over the past few weeks. And we had seen the share price of this company in a well-defined downtrend, and that has shifted after this long consolidation period, which lasted about 18 months, even not quite 2 years, we'll say 18 months. And recently, we did see a little bit of excitement coming into the stock. We saw the share price rise from about 2 cents to 3 cents as a high, and it has pulled back to 2.4 cents, and that's where I took a position. We've also seen a golden cross with the 50-day and the 100-day moving average, which is telling me there is a shift in sentiment. A reason why I think there is a shift in sentiment is because of change in management. They've also released the half-yearly results, and they were operational cash flow positive by $15 million. And I think the financial state of this company will only improve over the next few years. So this is why I've taken a position in this company, just a small position. And if we just continue to see some real good positive sentiment behind the company's share price movements over the next few months, I might add to my position if the share price keeps going up. Now onto a company that has been popping up on some of my scans recently, and this is Prime Financial Group. I've never really looked at this company before, even though they've been around since 1965. But just by looking at this one-day chart, which goes back to around September 2019, the share price has been moving up ever since August of 2020, so just after the COVID-19 financial panic. And we have seen the share price take off since August of last year, so that was around about 10 cents, and the share price has moved as high as 20 cents recently. But there has been a little bit of a pullback over the past few weeks from 20 cents to a current share price of 17 cents. So Prime Financial Group, they're into accounting and business advisory, wealth management, self-managed super fund and capital advisories. So I actually do own quite a few companies in this area. And in fact, if I compare the chart of Prime Financial Group to all those other companies, Prime Financial Group's chart actually looks the best and healthiest. I think the market cap of this company is fairly low, so they're by far the smallest of all those companies that I've just discussed, even though I have not mentioned any of those companies. I'm talking about Fiducian, Sequoia, Bell as well, Financial Group. So Prime Financial Group is a company, I'm going to have to take a little bit of a closer look, but lots of good positive sentiment behind the company, and the share price is in a well-defined uptrend right now. And we've also had that little pullback in the share price, and with the share price in between the two moving average, that is a time to take a position in this sort of company. If you need anything to do with intellectual property, Qantm is maybe the company for you, because that is their specialty, intellectual property law. I've been following this company for about 5 years. I'm pretty sure they listed on the ASX around about 2016. We had seen the share price fall a lot, and only recently, up until, and that, when I say recently, that was probably towards the middle or end of 2020. It wasn't until then that we saw a bit of a shift in sentiment. So a lot of negative sentiment behind this company for the past 5 years. And I really say the sentiment shifted in this company towards August, September of last year, when the share price was around about $1.15. And since that shift in sentiment, just above $1.15, the share price has been rising and currently is $1.35. We did see the share price fall in one day all the way down to $1.14. That would have been during that period where we saw a lot of negative sentiment in the overall market. If I had seen the share price of this company fall to $1.14, I would have gone all, no, maybe not all in, but I probably would have taken a position. But the market thought likewise, and the share price rebounded all the way back up to $1.77 during trading on that day. So we did see that little pullback, and that is a time to take a position of these companies that are in well-defined uptrends. And that's what's happening with the Qantm share price right now. A well-defined uptrend, positive sentiment behind this company, and we did see that pullback, but the share price has recovered and is currently at $1.35. Now to one of those companies that recently came onto my watch list, and the only reason it's on my watch list right now, it's right at a resistance point, fairly similar to MMA Offshore, and the share price moves above that resistance point at $1.52. That would be a good buying position or price to take, because if the share price then falls below the resistance level, you sell out and you don't make much of a loss. And the share price does look like it's moving into this uptrend as well. So if the share price moves above that resistance line, the uptrend would be confirmed, in my opinion, and that resistance would turn to support. Probably one of the only problems with Beach, when you look at this chart, which goes back to September 2020, a lot of volatility when it comes to share price of this company. I don't follow this company at all, but there would have been some pretty bad news in April of last year, because we saw the share price fall from $1.70 to $1.25, and then continue to fall through the next 4 months and reach a low of about $1.02 in September. And then we saw the share price rally towards the end of September into the start of October. In fact, it rallied from $1.02 all the way to $1.50 in about 2 weeks of trading. And just after that rally, we did see share price reach that resistance level of $1.52. So a lot of volatility in Beach Energy, and that's probably the biggest turnoff when it comes to this company. So we'll just be waiting to see if share price goes above that resistance level, and that's when I might take a position in this company. And the other reason why is it does look like there is an uptrend developing and some positive sentiment coming into this company, and the fact that oil prices are going up, reaching $90 a barrel would be attractive as well. Now, in the past, I haven't really been a sort of buy the dip investor or trader, but I'm starting to really like this sort of proposition for some companies that I do like. And Lynas fits into that category. This is the daily chart going back to September 2020, and a really nice uptrend in the share price, with it moving from about $3 to a high of $11.50, and the current share price is $9.16 at the end of trading on 7th of February. In these sort of uptrends, what I would usually wait for is a buy the dip situation. When the share price moves towards the 100-day, or in between the 100-day and 50-day moving average. We saw that at the start of October, when the share price moved to about $6.25, and then we saw a nice rebound in the share price. In fact, the share price went from $6.25 to a high of $11.50 over about a 2 to 3 month period, just around or just after that buy the dip situation. And we're right at that point right now. Share price has dropped from $11.50 to $9.16 because of that overall weakness in the market. It's at a good support level right now, which is in between the 50-day and 100-day moving average. And the reason why I would be thinking about taking a position here, it's a low risk, high probability sort of play. And the reason it's a low risk is if the share price falls to like $8.50, that would be a fairly bearish signal and you'd take your losses, which wouldn't be all that great. But the probability is a share price will rise from here if we don't see some more overall weakness in the market. So that's something you do have to be aware of. But right now, could be good buy the dip situation for Lynas. Another buy the dip potential play is Reliance Worldwide Corporation. I do like the future long-term potential of this company. I have never held shares in this company, but I've always wanted to buy shares in this company. And if we go back to, say, November 2020 and February 2021, we saw the share price twice hit about $4.90 and then pulled away. So even though I've got support written on that horizontal line, that actually was a resistance back then. And then the share price moved through that resistance fairly easily, and that resistance level became support. And then in October of this year, that resistance or support level was tested, and as soon as that test succeeded, the share price took off. In fact, the share price went from $4.90 to $6.60 in about a month's time. And then we did see a little bit of a double top there at $6.60, and the share price has retreated all the way back to almost $4.90. So if the share price does move towards $4.90, that would be an almost automatic buy for me with this company, hoping that that support level holds. Current share price is $5.17. I am recording this video just after trading has begun on the 8th, and share price has pulled back a little bit towards about $5.05. So I am looking very closely at the share price of this company, and that would be, again, a low risk buy, because if I buy it, say, $4.95, or if it tests and rebounds off it, that would be a low risk play, because if share price then falls below $4.90 and remains a bit low $4.90 for a period of time, that means that level becomes resistance, and that would be an automatic sell for this company. The next company on my list has been on my to buy list for the longest time, so almost about 7 or 8 months, and that is ParagonCare. This is a supplier of medical equipment, devices, and consumables. I was a shareholder of this company about 6-7 years ago, and this was a technical or a trading play when I bought into the company. I think the share price was like 20 cents. They now sold out at 40 cents, and the share price kept on increasing after that. Then the company went through some bad times, and the share price fell all the way to maybe less than 10 cents at one point. But a well-defined uptrend in this chart, and I've depicted the uptrend with this sloping orange line, and every single time the share price hits that trend line, we do see the share price rebound off it. So at this point in time, the share price is well above the trend line, so I probably wouldn't be thinking about taking or making a play with this company right now unless I see the share price move back towards that trend line. But I do have this on my watch list, and I do pay attention to the share price happenings of these sort of companies. And if we do see some good financial news released by the company, we could see the share price take off and that trend line never be met. Now onto a company that I have held in the past, Australian Clinicalabs. They provide pathology services, and they've only been listed on the ASX since about May of 2021. The share price has been in uptrend ever since then. And there was a lot of interest and hype in this company towards the end of 2021 into the start of 2022. We saw the share price rise from $4.30 to a high of $6.40. I decided to take profits a few days later when it did look like the share price would take a little bit of a hit because some of that positive sentiment had come out, some of that positive hype had come out, and the share price fell from about $5.90 when I sold to $5. But over the past week and a week and a half, the share price has remained above that $5 level, or around that $5 level, which is a really good support level. And the reason it's a good support level, if you go back to September last year, you can see this one candlestick, the share price did reach about $5 and then pull back. So that's the reason why this is a good support level, and that's why the share price is going sideways. So at this point in time, I have put this onto my potential or to buy watch list, and just want to see what happens or where the share price goes from here. So even though the share price is going sideways or consolidate, there are two scenarios moving forward for Australian Clinicalabs. We could see a breakout to the upside, or we could see a breakout to the downside. And until we get confirmation which way the share price is going, I'll just leave this on my to buy list, and in anticipation of a breakout moving in either direction, and that's when you might take action, potentially, particularly if the share price breaks out to the upside. Next company on my list is Firefinch, and unfortunately, for me at least, I actually did take a position in this company a year and a half ago when the share price was less than 20 cents. And then I sold out for a small profit, and the share price went from 20 cents to a high of 92.5 cents. So this was me being a little bit too impatient, because the share price at that point in time was going sideways. And then we saw a breakout in the share price towards the start of 2021 when it was around about or just under 20 cents. And we've just seen the share price go higher ever since then. And the reason why there's a lot of excitement and hype in this company is simply because they are a lithium explorer and developer. They also have a gold mine in production in the Mali area. So that's in somewhere in Africa. That's probably the one negative thing about this company is just the sovereign risk of owning and operating and exploring in that part of the world. But definitely nice uptrend in the share price. But we have seen the shares under pressure over the past month and a half, with the share price pulling back from 92.5 cents to a current share price of 63.5 cents. And right now could be a good buy the dip opportunity with Firefinch. Share price has moved below the 100-day moving average. But I want to see the share price rebound from here, confirmation that this is just a short-term dip in the share price, because it has stayed below this 200-day moving average or 100-day moving average for about a 2-week period, which is a little bit longer than what I would like to see. Usually I like to see when the share price falls below the 100-day moving average, I'd like to see a rebound in the share price fairly quickly after that, and Firefinch is not doing that right now. Now to a company that has been on my watch list for about 2 to 3 months, and that is GTN, not the most exciting sort of business. So they are a broadcasting media advertising company with operations in Australia, Canada, UK, and I think even into Brazil. And you know those traffic reports you might get on radio? GTN is a sort of company that does that. In fact, in Brazil, they think they're the only company that does that. So that's the sort of thing they do. The markup is fairly low, so not a lot of interest in this company, and I don't see massive growth moving forward for GTN. So the only reason you might make a play for this company is as a value play. And when you look at this daily chart over the past year and a half, well, this goes back to June 2020, the share price really hasn't been doing anything, but it does look like the share price is wanting to move into an uptrend over the past 3 to 4 months. Hence why I did put this company onto my watch list. And we did see a pullback in the share price from about 70 cents all the way to just above 50 cents over the past few weeks. So maybe this little pullback in the share price is a good potential short-term, medium-term trade in GTN. The last two companies in this list are recent IPOs, and the first company is FOS Capital. They are commercial, retail, industrial lighting solutions company, in particular dealing with LEDs. So this company listed on the ASX in June of last year. Fairly small company. I think they are operational cash flow positive and profitable on the small scale, but the share price has gone up from when they listed, which is a good thing. This is what you want to see for a company that has been listed for over 6 months. And they did release a good trading update a few days ago, and that's why we did see the share price rally from about 23 cents to about 27.5, 28 cents, and the share price did reach an all-time high. We did see a share price pull back in the last few trading days. So this company is on my watch list. I want to do a little bit more research on this company, but with the market cap and the fact that this company is profitable, I think the market cap could be something really low, like 10 to 20 million. And the fact that this company is profitable and they are growing does make this company actually attractive to me. The final company in this list is in fact the youngest company on the ASX. May not be the youngest company in terms of age, but IPD Group listed on the ASX, I think it was December 17. But the share price has only increased from when they listed, and then the company released a trading update, and the share price rose 15% on the back of that trading update. And when you look at the markup and you look at the financial state of this company, there's a lot to be excited, and that's the reason I actually took a position in IPD Group on the 7th of February following that trading update. So this company provides products and services to the electrical industry. So this company is profitable, they are growing, they are operational cash flow positive, and they're actually pretty good value when you look at the financial state, compare it to the market cap. Current share price is $1.46 at the end of trading on the 7th of February. I am going to do a dedicated video on this company in the next few days. More than likely that's going to be released on the 9th or 10th of February, and that video will be in regards to why I took a position in this company. So there are a few things to dislike about IPD Group right now, and the main thing to dislike is the fact that this company has only been on the ASX for 2 months. I do have a rule that I prefer to only buy into companies that have been listed for at least 6 months. So I went against one of my rules when I took a position in this company. But the reason I went against one of my rules is because they released a positive trading update, and a positive trading update supplants that other rule I do have. It overruled that other rule in other words. Anyway, so look out for that other video on IPD Group. So it's only been on the ASX for a short period of time, and one of the reasons they did list on the ASX is to get the name out there. So there is a bit of name recognition when your company is listed on the ASX. That's all I have for this video on 15 companies on my To Buy watch list. If you have any questions on these 15 companies, just leave it in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.